use him.
Change the voice and change the glasses, and you've got Mr. Buffett here, Andre. That's a compliment.
Thank you very much, Alec, for the compliment.
and nobody came up to you in Davos this year and said, Mr. Buffett, what do you think about commodity prices into the future?
Not exactly.
What did you take back from Davos? We bumped into each other a few times at the World Economic Forum, specifically about commodity prices.
I think what I've taken back from there is there's a major pullback in commodities, but yet a lot of the money being spent on recovery packages, a lot of the investment being spent, and if you look at China specifically, it's going to boost the type of commodities like ferrous commodities again, maybe sooner than what the economic world is going to recover fully.
So you're still remaining upbeat, which we have almost two types of philosophies at the moment. You had Impala Platinum on Thursday last week. David Brown was in the studio saying they're cutting their dividend, they're cutting their capital expenditure, they're conserving cash. Of course, we had the shock from Anglo American, not only cutting but not paying a dividend for the first time since 1939. You aren't taking that route at all. You seem to be going ahead.
What we've decided, Alex, is firstly also to conserve cash, and we've started that very aggressively even the first week in October. So we're conservative with our cash numbers. We have certainly looked at all the operations, and we said the principle is no operations must burn cash. We've done some restructuring, we've done some reorganizing, and with the platinum price that has recovered to over $1,000 at 10 rand exchange rate, we are comfortable with that.
Because but you did lose money on platinum in this 6-month period.
If one look at the number that was published today, that includes a mark-to-market adjustment when the platinum price come down. But we've showed in our presentation today that our platinum mines was actually cash positive for the 6 months to the tune of about 600 million rand. At the current prices, just to share with you, the current basket price in rand terms is about 22,000 rand per kilogram for both our platinum mines. And the cost is 140,000 in the one and 170,000 in the other ones. It put it in put the platinum mines we involved with in a fairly strong position. Added to that,
let's just understand that. Sorry, did you say the basket is it 220,000?
Yeah, 220,000
as against 180,000 costs.
Cost 170 in the one and 140 in the other
170
one.
and 140.
Yeah.
So you got a nice margin.
That's a nice margin. And the other advantage we do have, Alex, is we've paid for our capital, we've repaid all our debt, so the mines are actually not geared, they're debt free. That's a good position to be in the current market. And yet, we have done some restructuring. We have reorganized that to actually make them more effective.
As far as the iron ore side is concerned, concerns there that the prices are going to drop very sharply.
We to a large extent, we are price taker. And here our partners, ASOR, actually do the price negotiations. We also see a 30 or a 40% reduction in price. But if we go back to the 207 levels and we take a forward looking from there, then we're going to end up with much better prices than what we thought in 207. And we should not forget what the 10 rand exchange rate do to that. Linked to that, Alex, is the fact that we've built a new mine, Kumani, that's busy ramping up. It's going to produce at substantially lower cost than the older mine, which only got to about 6 million tons per year. We're going to 10 million tons. The first 6 months, we were on 3.5 million tons, so we are building up. So I think volume growth coupled to lower cost of production, to very good quality of iron ore. And we're a small producer. We have very long-term relationships with some of our clients. We've seen our volumes flowing very well, and prices maintained fairly well. But prices will come back.
Share price has halved in the last 6 months. That's possibly a result of what's happening with the market generally. But you're looking ahead to continued good, strong cash flows and perhaps not a 201% increase in your profits as you've done in the first half, but it's certainly an improvement.
If one look at the second half that we had last year, we had significant earnings in that period. What we have done in terms of chrome, in terms of ferromanganese, as we've responded to the market and we switch off furnaces and we're rebuilding stockpiles, we're doing long-term maintenance now. We're actually positioning ourselves so when there's a turn again so we can participate in that.
Andre, you've got a strong balance sheet. Are you finding good opportunities coming to you here in South Africa, maybe even Zimbabwe? You spoke about that 6 months ago.
We certainly looked at a number of opportunities, and we have actually enlarged our team that look at opportunities currently. Some of the ones we looked at, it's quite frightening to see the cash requirements going forward on some of those opportunities. So we're going to be very careful not to take the wrong steps now. But I think the joint venture that we're creating with Vale in Africa is also going to, that will also help and accelerate what we're looking for in Africa.
Andre Wilkens, Chief Executive of ARM. Tonga Hewlett's Chief Executive Peter Stader joins us now. Also a